Each sector has felt the crisis of 2020 differently, that's for sure. Retail has taken a huge hit, there's no doubt, and as a result, the data is piling up and won't stop. We have seen such a massive injection of capital into the system, but it won't do any good. This sector was weakened before 2020, and this just put it over the edge. What will come of all of this commercial real estate? You came here for the truth, so let me unveil that for you. Today, I want to look at what's happening with commercial real estate. I want to show you different businesses that have been dealing with this. We are going to look at, of course, the economic factors that are here in place. I've got some information about the stock market, Warren Buffett, and many other things that I got to get into really quickly. So let's begin. Struggling retailers rack up $52 billion in missed rent. We knew that this was going to be bad, and my goodness, is it ever. Deferred payments may be insurmountable. Of course they are. How are these retailers ever going to pay their rent? When you look at the small businesses especially, there's no possible way. They've got no revenue for several months, or at least reduced revenues. Many of these businesses barely make it by, and surely this is just the final nail in the coffin for too many. Unpaid bills and vacancies also spell trouble for landlords, and that's the next level, because you have to keep continuing to go up the ladder. And you look at the small business, they oftentimes have to pay rent, or if it's in the case of them owning that property, they've been paying the mortgage, and of course you don't have the revenues coming in, you're not going to be able to pay that. They go bankrupt, then the lender has to take it, and of course if you have too many of those write-downs, it is going to spell some major trouble. We saw the effects of that back in 2007 into 2008. 8 months into the crisis, clothing stores, restaurants, gyms, and other businesses find themselves in a $52 billion hole. That's the total amount of retail rent that's been missed since April. While some of the overhang has since been paid back, the remainder will be a drag on merchants as they try to rebuild, and landlords demand their money. In some cases, the unpaid balances could drive them into bankruptcy. We know that actually is the case for so many already, but I think 2021 is probably going to look a lot worse than what we've seen so far. You're going to have big bubbles that are going to be hitting next year, or even in the fourth quarter. I'm not sure if they are going to be able to make those payments in addition to their existing rent, and that's the case. How are they going to? You push it off. Okay, you don't have to pay rent for a year. That's fine. But what happens at the end of that? You still have to pay it. Who's going to come in? The government's going to come in. That just means your taxes are going to be higher as a result. It is really unfortunate to see the way that this is unfolded for too many people, and real individuals are getting hit by this. Nobody's worried about Goldman Sachs and JP Morgan and Apple and Amazon and them. It's really the small businesses that are feeling the effects of this the most. This chart here corresponding to that information, overdue rent percentage of retail rents paid since the earlier part of 2020. And you could see that, of course, the things were definitely terrible back in April, and they've gotten better. But ultimately, you don't need all of these people to not pay their bills, and somehow that creates a crisis. It starts with a very small amount, and unfortunately for too many, this is just not going to be something that can be resolved. It is, they break it down here: the strip center, general retail, mall, total retail, and it doesn't matter which one we look at, it isn't going to be paid back, because as we enter more lockdowns, as the economy gets worse, surely you are going to have an issue. Now, you look at all of this, and if you take it at face value, as we just mentioned a few minutes ago, you have to understand that there is not just that small business, not just the mom and pop, but of course you could look at the lender and how all of these derivatives are interconnected with it, and it is not a good sign, that's for sure. $20,000 in credit card debt, and negative bank balance, the cost of one woman's wait for unemployment benefits. I thought this was interesting because, she probably thought that at first, well, it's going to be next week, maybe the week after. Okay, I'll just use my credit card just for this little bit, and probably calculate it out. It's going to be, all right, $200. All right, maybe it's going to be $400. And then suddenly it's $1,000, and then it's $2,000, and it just added up and up and up. I don't necessarily condone what you did, or who knows. Personal circumstances are always different for everybody. I just think that it's interesting because they are telling people they're going to get a bailout. People are getting money in some way, shape, or form. You look at all these different businesses, everybody's getting this money handed left, right, and center. But for some people, that was delayed to a serious degree in many cases. I've had comments from people many, many months later after they were supposed to be given money saying, I never got a dime. I'm still waiting. So it just shows you how uneven and how unbalanced, and the system itself is rotten to the core. Every single country has expanded their debt, and this is just measuring the debt to GDP between the fourth quarter of 2019 and the third quarter of 2020. And it's extreme. I mean, my goodness, look at Canada on the top of the list. I say top, not necessarily in first place, but you can see to such an extreme level, government debt has expanded considerably, but also household debt. The household debt has gone up to such a level because of what people are doing with their housing. You've got super low interest rates, just unbelievable. You can get a home right now. It wouldn't surprise, the last time I checked, it's been a few weeks now, but it wouldn't surprise me to see 1.6% for a home. You can get a mortgage at 1.6%. Now, what does that tell you about what people are looking at when they see rent? All right, well, I can purchase a piece of real estate, or I can rent it. Well, I'm basically borrowing for free, so why not? Yes, I'll have $1 million mortgage, but it's all good. Even going above the ridiculousness of Japan and the US and so on. Canada, you're on the top of the list, I guess. Kenya seeks $2.3 billion loan from IMF to help economic recovery. State also seeks $1 billion to $1.5 billion from the World Bank. I just wanted to highlight this here really quickly to show you that this is still going on. Money comes in from these different institutions. Their demands are extreme, and there's no possible way that they'll ever be able to pay it back. This is the way it works, and they just take and they take and they take. And that's the system designed like that on purpose. This company here, Guitar Center, has filed for bankruptcy. I believe it is the biggest music store in the United States, and they're filing for bankruptcy today. It just shows you how so many different industries are being hit right now. People are not buying their instruments. My assumption is the way that they used to. Maybe the stores are locked down. They simply don't have that revenue. Whatever it is, we are looking at major issues going on, and this is affecting not only the jobs, of course, but you're seeing entire industries that will probably look very different in 2021. On the opposite end of the spectrum, you look at the stock market. In this case here, Dow could hit the 40,000 point level next year, according to this analyst. It is at approximately 30,000 right now, and surely it can get there. All it needs is more and more and more stimulus. That's right, more of all of everything they've been doing, basically the QE, all of the different programs they put in, and all of the bailouts just need to come forever and ever. We'll see what happens. You may have seen this news already, but I wanted to bring it up here for those who have not. Amazon expands push into healthcare with online pharmacy. So you can actually check out the Amazon pharmacy. I thought this was interesting because you have a lot of people that will physically go into a pharmacy right now as it stands, but that could rapidly change because people are going to be ordering something. They can get it online, have it there delivered in that day or maybe the next day. And for something like products that are available at that pharmacy, I think that a lot of individuals, especially in the younger generations, will go in this direction. So we'll see what happens. I think this is one more industry that's getting disrupted very fast. Warren Buffett bets on big pharma and bails on the banks. New stakes in Pfizer and Merck. Of course, doing this because of the recent developments. He wants to get on and ride that train. We'll see what happens. Probably, if they actually do what they say they're going to do, well, then throughout 2021, those will probably continue to bring revenue in, especially if the government is handing them money. So we'll see what happens. The banks side, they don't believe that there is much going to happen for them. And this has been a trend for Buffett, actually. He's been consistently selling off on these banks. So it's something to note. This is continuously happening. I just wanted to bring it to you. Tech icon criticizes San Francisco, announces move to Florida. Quote, impossible to stay here. You can read what he had to say. This guy has been around on many different companies, PayPal, and they mentioned a few others, but essentially saying that there's just too much. I can't handle it anymore. The regulations, the taxes, everything is just lower if you go to Florida. And so he'd be doing the same thing as we see with many of these other very wealthy people. They're leaving California and New York and other places, New Jersey and so on, to get out of that frame and basically move into another. And it seems like Florida is seeing a lot of high net worth people moving. Work here. Tourist-starved Caribbean woos homebound workers. This article gets into many different examples of areas whether it's Bermuda and so on, where they are extending their visa program for a year, and you can get in there as long as you're able to work from home, knowing that you're going to work from home. You're not going to take a job from somebody locally there, and essentially allowing people to come in, stay for the year. Of course, when you're there, you're going to be spending money and so on. I think this is really smart on them, at least from the economic aspect of it. That's what I'm looking at, the economic aspect, to really try to bring in some people if they can, bring those revenues in and try to keep the businesses sustained. Let me know what you think in the comments. This was a shocker to me. Canadian housing market gets reality check with a drop in sales. October transactions declined for the first time since April. Still, conditions are tight with inventory at a record low level. And they can just break it down over here, just showing you that this has been declining as we see as the months have been going on. But I'll tell you right now, if you see this broken down by the detached homes and then you look at the condo market has been very soft. It's going down right now, whereas the detached homes have basically accelerated considerably. And this goes for Toronto especially. Toronto is the most ridiculous bubble. I will mention it in every video if I have to. I want to know if you are in Toronto. Please let me know what you see and let the others around the world know what you see and understand that it's been going on and it is very serious right now. The cost of living around the world, and this is measured here, EIU.com had this full breakdown. And they just give you the 5 most expensive cities. Looking at this, Switzerland, obviously, generally is somewhere in the top of the list. And right now we have Zurich, Paris, Hong Kong, Singapore, and Tel Aviv at the top. And you look at these and just see how much money people have to pay for the average anything. I believe it was Switzerland. If it was Geneva or Zurich or all of Switzerland, I did quote something to you where they're trying to make the minimum wage the equivalent of something like $4,000. Imagine that. The minimum wage equates to 4,000 US dollars. So imagine if you're working in a half decent job somewhere, imagine the amount of money you make. Of course, that's not just cash in your pocket. The expenses are even higher. That's why they're trying to get minimum wage to be 4,000 a month. I mean, it is just off the charts in some of these places. And why? Because of the activities of central bank and the devaluation of the currency. And that's all for this video. If you found it informative, hit that thumbs up button. When you do, you are supporting me. I want to thank you for that. If you want to learn how to sell stuff online, you can do so for free, theamazongps.com. If you want to know about my 2 books, why they're important, why they will help you in every way related to the financial system and making money, check them out. You can actually flip through them at the link in the description. If you want the audiobook instead, themoneygps.com. But don't go anywhere. You've got to watch this video. A lot of information I got into. You definitely want to see it. Click it. I will see you there.